Hi everyone, welcome back to the channel. Today we've got some big news in the world of finance and cryptocurrency that you won't want to miss. So let's dive right in. First up, the SEC has dropped investigations into major players like Robinhood, Uniswap, OpenSea and Coinbase. This is a significant shift in regulatory policy under acting chairperson Ueda. Instead of focusing on enforcement actions, it seems they're moving towards clearer guidelines. While the Binance case is still open, this broader change could stabilize the crypto market and even influence Bitcoin's price. Industry leaders are now calling for structured regulations. In other news, cryptocurrency exchange Bybit confirmed a massive $1.5 billion hack on February 21, 2025. The hackers drained Ethereum from its cold wallet, and Arkham Intelligence has identified North Korea's Lazarus Group as the culprits. To make things right, Bybit secured emergency loans to reimburse customers and even announced a 10% bounty program, potentially $140 million, for recovery assistance. Meanwhile, METH Protocol managed to recover $43 million and Tether froze $181,000 in related funds. However, Exchange X has denied any involvement in laundering funds. Now let's talk about Bitcoin. It fell below $90,000 on Tuesday amid a broad cryptocurrency sell-off, largely triggered by the Bybit hack and declines in meme coins. Stagflation fears are creeping back as US economists raise concern, which could impact risk assets like Bitcoin. Bank of America reported that stagflation expectations are at a 7-month high. Despite these worries, experts believe an immediate Bitcoin crash is unlikely, with BTC hovering around $85,000 by Wednesday. Switching gears, Nvidia reported Q4 revenue of $39.3 billion, exceeding expectations by $1.2 billion. That's a whopping 78% growth year over year, with fiscal 2025 revenue hitting $130.5 billion, up 114% from last year. However, investors are feeling cautious due to the impact of DeepSeek's AI model. Nvidia's stock soared in 2024 but has faced a recent drop. They expect Q1 of financial year 2026 revenue to be around $43 billion. Berkshire Hathaway also had a stellar fourth quarter, reporting a 71% rise in operating profit, reaching $14.5 billion. This surge was driven by a 302% increase in insurance underwriting, with insurance investment income soaring nearly 50% to $4 billion. However, they did face a $1.3 billion pre-tax loss from California wildfires. Berkshire ended 2024 with a massive $334.2 billion in cash as Warren Buffett continues his search for major investment opportunities. In international news, the EU has adopted its 16th sanctions package against Russia, which includes stricter financial controls, trade restrictions, and expanded oversight on cryptocurrency transactions. These measures target individuals and entities involved in crypto transactions that help Russia evade sanctions. The EU is also tightening financial restrictions on non-Russian banks. European bank shares have rallied for 9 straight weeks, with the Stoxx 600 bank index up 18% this year. Strong earnings, share buybacks, and lending growth are offsetting concerns about falling interest rates. Banks are now the largest overweight in Europe and are considered undervalued. This rally has led to a major re-rating, although some revenue erosion is expected. Let's look at some economic indicators for this week. A slight drop in yields suggests stronger demand for short-term US debt. This could indicate that investors are moving towards safer assets, possibly due to economic uncertainty. Consumer confidence fell short of expectations, reflecting concerns over inflation and economic stability. Lower confidence can lead to reduced consumer spending, affecting overall economic growth. A sharp decline in oil stockpiles signals tightening supply, which could push oil prices higher if demand remains stable. Home sales are slowing, likely due to rising mortgage rates and affordability concerns. If this trend continues, it could impact real estate prices and the construction sector. Another major drop-down in crude inventories suggests a potential supply crunch, which could drive oil prices upward. A strong rebound in durable goods orders signals rising business investment and consumer confidence in long-term spending. The economy grew in line with expectations, though at a slower pace than last quarter, indicating steady but moderating expansion. A rise in jobless claims suggests a slight softening in the labor market. While still within a healthy range, a sustained increase could signal trouble ahead. Inflation remains persistent, slightly above the previous month's reading, reinforcing concerns about price pressures. Annual inflation cooled as expected, a sign that disinflation is underway, but still above the Fed's 2% target. An increase in manufacturing activity suggests improving business conditions, though the sector is still in contraction territory. We are seeing mixed signals in the economy: rising inflation pressures, slowing consumer confidence, but a resilient manufacturing sector. Will the Fed react to these trends? Let us know your thoughts in the comments. Next week, market attention will be focused on key economic indicators and earning reports, including S&P Global Manufacturing and Services PMI, ADP non-farm employment change, non-farm payrolls, monthly average early earnings, and unemployment rates. Also, several major corporations are set to release their earnings reports, including Target Corporation, AutoZone, Best Buy, Sea Limited, Broadcom, Costco Wholesale Corporation, Marvell Technology, Plug Power, Abercrombie & Fitch, and Sonova Energy International. That's all for today's financial roundup. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more updates. Thanks for watching, and we'll see you in the next video.